Welcome to SmallCap Sunday. This is my new format where I'll analyze some unknown small cap stocks that have the potential to boost the performance of your portfolio. Here, I want to discover some new investment ideas off the beaten path. Today, I look at the German renewable energy company Energiekontor. With their unique business model that we'll have a closer look at, this company is a pioneer in their field and active for almost 35 years already. And even though the stock had a tough time last year and is down over 40% from its highs, analysts see an average one-year price target of well over 100%. So, is the stock a possible buy candidate or is it a value trap? Well, in today's video I break it down. I look at the business model of Energiekontor, the markets they're active in, and the latest financial statements. I'll also look at their valuation to see if now is a good time to buy. In the end, I'll answer the question, is Energiekontor a good long-term investment or not? My name is Florian, welcome to Cashflow Maniac. Before we jump into the analysis, you might ask yourself why you should even look at small cap stocks. And there are several reasons that are especially relevant right now. I am thinking about doing a full video on this and break it down in detail, so if this is something you would like to see, please let me know down in the comment section. In short, the concentration of US large and mega cap stocks in many broad market ETFs is very high at the moment. But it was not always this way. Over the last 15 to 20 years, small caps generally have been more expensive than large and mid caps, at least on a forward PE basis as shown here in the yellow curve. The reason for this change is that the markets have been driven by the mega caps over the last couple of years and small caps have underperformed across the board. But historically, this has been different. This study from MSCI found that between 1975 and 2023, small cap indices have outperformed large cap stocks on a rolling basis. And the longer the time frame, the greater the outperformance became. So we have a historically low valuation of small caps versus large caps, while over the long run, small caps have outperformed large cap stocks. So I think that there are currently good chances with these stocks. But of course, small caps in general are more volatile and risky. So small cap investors need to be especially careful in their stock choices and diligent in their research to avoid making costly mistakes. And now that we got this out of the way, let's dive into the analysis of today's stock, Energiekontor. And to start off, let's have a look at the fact sheet first. The ticker symbol of Energiekontor is EKT and they are listed on the German Xetra stock exchange. They are working in the utility sector and were founded in 1990. At the moment, they have around 300 employees and the headquarters sits in Bremen, Germany. The market cap sits around 800 million euros at the moment. Energiekontor specializes in the field of renewable energy. The company's core business is split in three. The first major sector includes the planning, construction and project development, while the second is the operation of their own wind farms and solar parks. So the company covers the whole development process from planning to construction and even the operation of their own facilities. But what I find very interesting about them is that they also offer services for third parties, such as project design and development for investors in the renewable energy sector, and even help others to efficiently manage their own parks. So they have a very unique business model that combines the rather volatile project development business with the stable and predicted power generation and operation business. The recurring income from their sale of electricity provides a secure and growing basis for a sustainable growth, and with almost 35 years of operation and over 160 realized projects, they have been one of the pioneers in this renewable energy sector. Their target is to cover the operating costs with the operation of their own parks, and they are roughly aiming to keep around half of the developed projects in their own hands, while selling the other half to other operators or investors. Most of their own assets are in Germany, where they operate 31 wind and solar parks that generate around 3/4 of their power. But they also own parks in the UK and Portugal, and they are currently actively looking to increase their geographic diversification to France and the US. Their development projects are a bit more diversified, but Germany still makes up a bit more than half of their projects that are currently in their pipeline. The UK is with almost 30% on second place. But here we also see the diversification effort, as the US and France also make up around 8 to 9% each. 67% of the projects are wind parks, while solar is with 33% quite a bit smaller. This is not surprising though, because in the past the company was only focusing on wind parks and is currently not only working on diversifying on a geographic level, but also on a technological one. And indeed, the share of their solar developments has been slowly growing over the last few years. The two founders of the company, Dr. Bodo Wilkins and Günther Lammers, are both still involved in the supervisory board and are both still appointed until 2028. They also still have their skin in the game, and together they hold a bit over 50% of the company's shares. This still gives them a lot of power and has advantages as well as disadvantages. Energiekontor is operating in a quickly growing market. In their core market Germany, the target for 2030 is that 115 gigawatts of power will be generated by using wind. This requires the annual expansion of 8 gigawatt, which is almost a doubling of power produced with wind in the next 5 to 6 years. For solar, the demand is even higher. To reach the target of 215 gigawatt in 2030, it is necessary to expand the current capacity of 20 gigawatts per year, which is quite a bit above the long-term average. And that is only in Germany. The numbers in their second biggest market, UK, do look very similar. Britain is aiming for carbon neutrality in 2035, and the required power capacity for solar and wind is very close to Germany's. But not all is great in the sector, and Energiekontor also has to face some challenges at the moment. These include prolonged delivery times of components and wind turbines that also affect the realization process of their projects, as well as increase the costs for these components. The high interest rates and delays in grid expansions also don't help here. But with a shift to a ready-to-build project model instead of turnkey sales, and their procurement expansion of large-scale components to non-European markets, the company is already working on countermeasures. They are also working closely with infrastructure owners to secure the grid connections of their projects and secure attractive electricity tariffs with short-term PPAs or power purchase agreements. The indecisive and oft short-term oriented German policy in regards to power generation in total and renewables especially also doesn't help here either. These challenges have also put quite some pressure on the stock in the last year. The stock did underperform the S&P 500 in pink, as well as the more comparable German SDAX here in purple, with almost minus 30%. At the moment, the stock sits more than 40% below its all-time high. Over the last 5 years, the picture looks different though. Here, the company could outperform both indices with 240% return. And over 10 years, the picture becomes even better. Here, the company did outperform the market with 560% return. And these are just the price returns and don't include the dividend that the company could massively increase over the last 5 years. But we'll come to this in a bit. First, let's see how the fundamentals of the company look and if they also have gone down like the stock price or if the company is still financially healthy. When we compare the results of the first half of 2024 that the company just reported in middle of August, we see that even though the sales went up, all other metrics like total income, EBITDA or earnings per share went down actually. But there is no need to worry yet. One of the reasons for this is that last year has been a very strong year for Energiekontor. There were several big project developments that have pushed their sales, earnings before taxes and EPS. This is shown here in the comparison of the dark green bars. In the first half of 2024, there were no project sales yet, which is leading to skewed numbers here. And even though the company has sold 50% of one wind park in Germany since then, the bulk of this year's earnings is expected to come from several project sales in the UK. However, there are some external factors, like the delay of the expansion of the planned supra-regional grids, that have also pushed back the planned dates for these sales. So, I would expect that the numbers for the full year 2024 will also lag behind the numbers from last year. But the overall project pipeline for the next years is filled to the brim By end of last year, the company reported around 11,600 projects in their pipeline with more than 2.3 gigawatt in phase 3 to 5, where most of the value is generated. Around 72 megawatts of power were under construction for their own parks. In their last report, these numbers have actually increased to now more than 12,000 projects, with 2.5 gigawatts being in the pipeline in phase 3 to 5. This is an increase of 5% to 10% compared to only half a year ago. The projects for their own parks have increased even more by around 25%, and now more than 100 megawatt are under construction here. So a big portion of the huge growth from the last few years has been generated in the last year alone. But the numbers of the last 5 years are also quite impressive. Here we have a revenue growth of 170% and an even more impressive net income growth of over 200%. The operating cash flow has increased by 31% and the earnings per share still by a very impressive 67%. But as we just saw, please keep in mind that the numbers for this year will probably go down a bit, which will also affect the short-term growth. But with their full order book, their expansion strategy underway and securely tailwinds in their back, I believe that the company can keep growing, at least over the long run. The profitability of the company is also quite good, which is partially due to the ever-increasing power generation business. The EBITDA margin sits at 55%, the net margin at over 34%, and the return of invested capital at almost 18%. And not only are these numbers very good, they have also increased steadily over the last years across the board. Another thing I like about the company is that for a utility company, it has quite low debt levels. And even though their long-term liabilities have increased on a year-to-year basis, only a small portion of it is to credit institutions. And the maturity dates of these debts are also staggered over the next years. This brings the long-term debt to EBITDA ratio to 2.1 times, which is well below my threshold for my investments of 3 times and very good for such a utility company. The company has also bought back shares on a regular basis over the last years, which has brought the average share dilution over the last 5 years to minus 0.8% annually. Again, in a sector where most companies actually issue new shares and further dilute their shareholders, this is a very good value. And since May of this year, the company has started a new share buyback program for a maximum of 80,000 shares or 9 million euros over the next year. But the company is not only returning money to their shareholders via share buybacks. They are also paying a regular dividend that they could increase on quite a high level during the last years. Currently, the yield is sitting a bit over 2%, while the annual dividend growth over the last 5 years was an astonishing 24.6%. And while the dividend is very safe with a small payout ratio of only 22.5%, I would not expect that they will keep up this high dividend growth rate over the long run. The company's growth strategy until 2028 predicts an annual average growth rate of 15% with a focus on profitability and cost leadership. The company is also sticking to the target for 2024 they set at the beginning of the year of an earning before taxes of 30 million to 70 million euros, although they think that the result should rather be on the upper end of this range. In the past years, they could easily beat the target growth rate though. The one-year price target for the stock, based on 3 analyst forecasts, indicates quite some potential upside. The minimum target sits at 109 euros, which is more than 90% above the stock price as of today. The maximum upside even sits around 150 euros, which would be more than 150% higher than today. So even in the short run, the risk to reward potential in the stock seems to be quite good. But the forecast also shows that the EPS is expected to decline again from the high values of 2023, and it also doesn't show a stable uptrend. The revenue, on the other hand, should grow with a bit over 6% annually until 2027. And while this is not too bad, it is still far below the values of the last years. So, as we saw before, the stock was under quite some pressure last year and is now trading 40% below their highs. but they could still improve their fundamentals, which has brought the valuation down quite a bit. Currently, they are sitting at a PE ratio of 10.7, an EV to EBITDA of 8.6 and price to cash flow of 6.7. All these values are about half of the 5-year averages and roughly 40% below the corresponding sector medians. This is quite cheap even when considering the weaker expected performance for this year. But what we also shouldn't forget is that Energiekontor is a German company and stock. And the valuation of German stocks usually is a bit below their US counterparts. Before we sum this up, if you like the video so far, please smash the like button and subscribe to the channel so you don't miss out on my next analysis. I find Energiekontor very interesting. I like their unique business model that combines the volatility nature of the project business with a very stable and predictable one of the power generation. As a pioneer under the renewable energy pure plays, they have a lot of experience in this sector. They also have a very clean balance sheet, which is very rare in this utility sector, and they are also buying back shares, which is even rarer. And even though the dividend yield is not too high, they could grow their dividend significantly over the last few years, and the still low payout ratio gives even more room to the upside. The short-term growth will slow down compared to the extraordinary growth from last year though, but over the long run, the market position and secular tailwinds should help the company to keep growing nicely. The valuation of the company is very low compared to its own history as well as the sector median, which is also a result of the weak performance of the stock over the last year. But analysts expect a 1-year price target that is around 120% higher than today. So the current weakness could be a good opportunity to buy. I already own Energiekontor and I just used the current weakness to double up on my position last week. So my view of the company is definitely a bit biased. Please take this into account and before investing, do your own research and only use this video as a starting point for your own analysis. And guys, in the current unstable market environment, it is important to keep your long-term focus and not get frightened by short-term drawdowns. If you are interested to learn about the mindset that I use for my investments, you should check out this video where I go over the 6 most important parts of it. That being said, thank you so much for watching guys and see you in the next video.